I'm ready. Now, finally. Well, welcome back, everyone, to another awesome market review. I sound like I'm out of breath because I just got done working out. I'm pretty gassed out, so I apologize if I sound like I'm out of breath. But real quick, risk disclosure, read this over. Remember, as always, if I put this up here for a reason, so it's you pushing the button. You assume that risk on your own. Read through this and be advised that you can lose real money when trading, and these are just my opinions only and are not an invitation for you to push the button. So pause the video, read that over, and I'm going to get right into this. So I'm going to make this one rather short because a lot of people probably just want you to get right to the point, and I really don't feel like sitting here talking for a long time. So I noticed that this week opened up. I honestly don't even have the Sunday opening price yet, so I apologize for that. I think it's, where is it? Where is it? Somewhere around here. Yeah, it doesn't really matter. It's up to you. That's up to you if you want to go find that. But annotate the opening price and notice that we're probably below it on Sunday. Excuse me. I think it's right here. Yeah, right here in these candles right here. That's your new week opening gap. So as you can see to the right side of the chart, that actually stopped at dead in its tracks earlier today around the close, and we are actually working our way down into these equal lows. I think that's where we're headed down to right now. But I'm not interested in taking a short on that. That's just really smooth edges, so I think the market's gonna come down and react off this order block right here, these consecutive down close candles right before this upside delivery. So this is a 5-minute chart. I'm gonna go back to the daily, and as you can see here, this is the wrong contract, so this is just the continuous chart. I'll actually take you to the new delivery contract. I think we're in September now. I believe so. June, September. Okay, so a weekly chart. And as you can see, we have reached up and filled in this liquidity void beautifully. And price seems to enjoy that. So we've opened back up. This is Monday's. Wait. Oh, this is Monday's trading. We're not opened. Oh yeah, we are opened back up. I got this all messed up. Tuesday, what the heck? Oh, this is a weekly chart. I apologize. That's why I was confused. So we got today's price action, and then we got the Tuesday candle, and I'm expecting us to reach down into this order block here. It's actually a propulsion block because we have it nested inside this order block. So be mindful of that going into tomorrow, and if we do get some violent move, we could come down in here, but with the propulsion block, I'm expecting us to tap down in here and just hit it and then take off to the upside. So that's what I'm expecting for tomorrow. As for today, I wanted to go back to the weekly chart, and as you can see here, we completely filled in that void this week, and now we're working our way up towards this order block, and we've actually went past the main threshold. So once we get down into that daily time frame PD array, I'm expecting us to turn around, go right up the other way, and take out the short-term high. Obviously, that can change over the course of a week, but that's just what has my attention, and we'll just go from there. So 4-hour chart, real quick. I'm going to put this on here though first. You like to use red, propulsion block, draw that out in time. It's Friday. Change the color to red because it's a down close candle. It's just my thing. And I take that. I'm going to call this candle a PB, so propulsion block. So it's nested inside this order block right here, this down close candle. So I'm calling this propulsion block. I'm watching the wick of that, and then I'm going to go down to my 4-hour chart. And as you can see here, we have completely rebalanced this. So once we close and leave this here, this movement here, I'm expecting price to reach down here into this implied fair value gap, the wicks here. And it's not the most beautiful thing in the world, but that's just what I see. And then get a tap into here. Now, does it have to? No. I mean, it can use this fair value gap right here on the daily time frame. And just trade into the consequent encroachment to another level that you'll want to be mindful of. And if that does not give price a reaction and treat it as support at the consequent encroachment right here at the 50% level on the fib, so this imbalance, you have 0.5 right here to your right, 4298.75. If you do not see support building up there, then you can expect it to reach in all the way down into this propulsion block and completely fill in this gap right here, all the way down the bottom. But that's where this candle, well, not exactly. I mean, it can come down in there and slightly reach down in there and not fill it in completely, but I'm expecting it to either reach down into this down close candle or into consequent encroachment. But I do believe that we are heavily bullish, so I think, and I'm not saying that that's a guarantee, I'm not saying that that's going to happen, but because we are above this fair value gap on the weekly chart, or we're above this this liquidity void, I personally am watching to see if price can find support at consequent encroachment of the daily fair value gap. I'm just watching right here. If we can get that, I'm expecting us to take off to the upside. So you take your little fancy tool right here, down here, and then up, and then retrace and all that, yada yada yada, and boom, off to the races she goes. So that's what I'm thinking. I'll have to wait till tomorrow and see what happens, but quite literally, I think that's all I got for you. We can cover Amazon too. So Amazon, nice up close candle here. Obviously, I didn't take out Friday's high. Failed to do so. I believe I mentioned that we're going to see higher prices on Amazon, but obviously we have to see what happens tomorrow. Still bullish on it. And then what else did I cover? DoorDash. I think this is it. Right here. So we were able to close up on the day, but we did not take out Friday's close, or Friday's closing price. I do believe that we're going to reach up into this liquidity void right here. This really has my attention for this week. And ultimately, I think that we're going to reach up and to close in this imbalance right here. So basically from here, this candle's high, all the way up to this candle's low. I think that we're going to likely fill that in. But like I said, we'll have to wait and see. And then I'll take action from there. Yes, I do have trades on this. Yes, I am taking long calls on DoorDash. I am more than happy to show you, but I'm just trying to get right to the point and just show you what I think is going to happen. I will show my executions on Robinhood and Thinkorswim because it's really easy to hide your account number, and I don't want anybody getting access to my account. That's why I don't show my trades on this platform, because I don't really have time to blur out this down here. And then, of course, you get people that think like, oh, you're a fraud. Like, no, I'm not a fraud. I just don't want to have somebody see my account number, because then they can go into my account and steal my money on Top Step, especially when you're getting funded. It's like, can you imagine how devastating that would be if somebody were to hack you? It doesn't sound good. So that's probably something I'm probably not going to be interested in showing. I will show you Robinhood because it's easy to hide that account information. Like, I can show you my trade. You may think that it's not real, but I don't even think that you can fake trades on Robinhood. There's no demo trading, so it's not even like you can even do that. So if somebody can copy and fake a trade on Robinhood, you are impressing me. All I gotta say is kudos to you, but that's not a good thing. I'm not saying like, oh, congratulations, you can do that. But I just know that I don't think that's possible. So I'm going to leave it at this. You guys study today's price action. I'm actually going to go back to ES here. This is Dow. So one thing I caught on to today before I end this off is we had a beautiful, beautiful up move today. So we opened up, this is September. It's kind of not very liquid right now. I think the liquidity is just kind of building up in here. So I think we're still in the June delivery contract. I forget which one it is. I think it's the first week that we expire. But as you can see here, if you look at ES on the continuous chart, I did screenshot this for my notes, but I was not paying attention to this low right here. I wasn't really interested in that. It was just like right here. This is just too smooth of lows, and then obviously if it's going to go past these lows, it's going to go and take this one out. And then in my head, I think it's going to just go down here. So we had a nice upside movement this morning. During the lunch hour, it ran the short-term highs, relatively equal highs, ran those. Had a shift in market structure here twice. This low, this low, this low, these lows, just tons of them. You didn't really get a chance for it to come back in here. There's a reason why I went up here. There's Wikipedia right here. I'm not going to cover that. I have to study that myself. And I'm not really interested in looking at that because I don't trade on Mondays. I just like to observe because Mondays are just, I don't know, they're just kind of quiet. So I tend to leave them on. So this right here is a 15-second chart. So right here we have that the noon lunch hour, basically stop run, these relatively equal highs, well, exactly equal highs. They ran those, went below a short-term low, right here, right here, right here. I mean, there's all kinds of them, obviously, so I'm not going to, you can look in your charts and see that for yourself. And then right here, when we left and went below, which this is really, really, really something that I find interesting, is if you look, and I'm kind of getting off topic here, so I apologize, but if you take this old low right here and draw it out in time, I love this. It's just so like accurate in my opinion. It's so easy to work with. So as you can see here, we went below this old low, and you got your little breaker here. I'm not gonna look into this and show you because it's a 15-second chart, but the breaker is there, and we're obviously breaking this old low, and then I'm seeing that it's not willing to go back above this high or any of these highs in general. It's like basically broken resistance or broken support and then turns into resistance. And you can see here that we broke below this old low, and that right there should give you the confidence that we're probably going to accelerate way down in here where that old sell side is, way to the left over here. And even if you came up to your charts, which 2 o'clock to 4 o'clock is your sweet spot, you start at 1:30. I've learned that doesn't really interest me. I prefer just the 2 o'clock sometimes. And it's not always going to be there every single day. Well, I shouldn't say that. It is there every single day. It's just the move is just accelerated to the downside, and to me it's just like I'm not even interested in that anymore because I've seen it happen, and I'm just saying, yeah, whatever. I'll come back the next day and participate. I don't really worry about missing out on moves anymore. I used to, but it's going to happen again. It repeats. So I'm not really worried about missing these moves. I just like to watch them repeat over and over again. So if you were, let's say you were in front of your charts at 1:30 here. So 1300, that's 1330. So you come to your charts right around this time. Yes, I can't, well, I would say this happened a little bit early, but I can't subscribe to the fact that it happened early because I need to study more, but I know there's a lot of macros this thing runs on. I know 1:30 is one of those times. Right before 1:30, about a few minutes prior, we just slam lower. We just eliminate all these lows and take out these equal lows here and just rips right down in there. Just beautiful delivery to the downside. So if you were to come back to your charts around this time, which from experience, I have confidence that I can come into these charts, and if it's left this, it came up, rebalanced this, left it, has a shift in market structure below an old low right here, comes back up to this gap right here, my stop personally would be above this high, from what I've learned. That's where I would put it. So we're talking 4,303.25, okay? And you're entering not here, because look at this. Take the fib out here. Look at this price leg. I probably ain't drawing this correctly, but you see this price leg right here? 50% on the fib. That's why I'm choosing this leg is because we came down, rebalanced this, so this BISI has now had buy side and sell side offered. So it's rebalanced. It's now left this by going below this old low. To me, that tells me that's a balanced price range. Now, we have a new price leg lower. And if we're anticipating these equal lows on, this thing is moving around so much. If we're anticipating these equal lows way down here, and then that sell side down there that I just showed you, you just have to look at your chart and you'll see it. If we're anticipating that being taken out, we can come into our charts, take a fib, sell short in a premium, right above this high, and, well, let's see here, so, 4,301.25, you had one ticket drawdown. So if you're trading a mini, that's $12.50 a drawdown. That is amazing. Like, that's awesome. And you're basically selling short in this gap here. I don't like to say fair value gap. It's kind of nerdy, but I'm not judging because that is true. It is fair value. It's a reasonable price for you to get shorted. It just sounds nerdy. But who cares? You're making money, right? So right there, there's your short. One ticket drawdown, and then just rips, just completely just obliterates everyone and just collapses lower. And you have multiple spots where you can take partials. So you can take your partial below this low, or 5 handles, like he's taught. You can take your partial below this low, this imbalance, this low, these lows, this little gap right here. You have to zoom in and see it, but right here, there's a gap right there, and then these lows down in here, and then ultimately below that sell side liquidity pool down there. Now, obviously, I wasn't aiming down in here. I was just using the higher time frame 4-hour imbalance, and once I went down there, I was content. I wasn't worried about getting every low, in my opinion. I did not trade it. I just was content with the fact that I saw that. Like, that was good enough for me. So, all in all, I probably won't show this again, but it's just something that for those of you that don't really know how to see how much ticks or handles you get, you can use the info line. So this candle right here, so that's not your entry right here. It's like one tick above it. So you just take your info line right here, and if you don't know what the info line is, it's right here. It's got a little trend line and a little box right there. I believe you can find it in here. Yeah, info line. And you just star tool that, and then that will show you how many handles you received in that move. Not how much you made, it's just an estimate of how much you could have potentially made if you were to short this. And then obviously you need to consider the fact that you're going to take partials. So from entering into this imbalance, and then exiting, not the whole thing, like not exiting all 10 contracts down here, exiting with partials, and then your last one will come off here. That's 20 points or 20 handles, and then an additional 3 ticks. So 20 handles in an E-mini S&P is $50 per point and $12.50 per tick. And then with a micro, if you guys don't know this, it is $1.25 per tick and then $5 per handle. And then ultimately you do the math on that and you tell me if that's gonna pay mortgages and bills and all that. You just tell me if that's gonna pay that, because I'm pretty sure that'll pay the bills. But anyways, that's all I got for you guys. I hope you guys found this insightful and actually were able to learn something from this. If you guys enjoyed watching this, throw a like if you feel like you're learning something and you're having fun with me. If not, that's fine. I don't need the likes. I want to know that what I'm saying is helping you progress versus just leaving you hanging by a tree and just waiting for the apple to fall. And you're the apple and you're going to fall right on your head. And yeah, I don't want that to happen to you. So I care that all of you that watch my videos succeed, and I would not be teaching what I know if I couldn't teach. So I'm going to leave it at that. I'm definitely going to cover some more videos every single day. I actually kind of enjoy doing this because I want to teach this to my children. So I'm actually doing this for my future children. I don't have children. Sorry, I shouldn't have said that. I meant to say that I'm going to be teaching this to my children. That way they have these videos, and I have my own screenshots and everything. But when I'm talking, just like ICT says, I'm talking to my family, and I'm mostly doing this to make sure that they have this information and my understanding from what I've learned. And I'm also here to help you guys out. So with that being said, I am out of here. You guys enjoy the rest of your day and try to stay in peace.